So I still think silver will still be second choice among metal investors. But I think as gold, which could start off the beginning of the year, particularly if he is going to go through with all this tariff stuff and everything, may see a little weakness. But I think as we get into the second half of the year, both silver and gold should overcome. Gold should overcome its high of this year, and silver should finally get above 35, 36 and really start to take hold. And maybe even as we get into that next year, even start to lead gold for a while.
The precious metals market enters 2025 with cautious optimism. Analysts project a period of consolidation before potential significant moves higher. Market dynamics suggest that gold may establish $2,500 as a support level during the first quarter, though rising U.S. interest rates continue to present headwinds for the metal's appreciation. Notable market analyst Peter Grandich provides insight into the conditions necessary for substantial precious metals appreciation in 2025. His analysis emphasizes the critical role of mainstream investor participation in potentially driving gold toward the $3,000 mark. However, the path to such levels appears contingent on several technical milestones, particularly the metal's ability to sustain momentum above $2,800. Silver's trajectory presents a more complex scenario. The metal must maintain prices above $35 and $36 to establish upward momentum, while support levels at $28.50 and $26.50 represent critical thresholds. Market observers note the vital distinction between gold and silver's price behavior, with silver historically demonstrating greater price volatility and susceptibility to sudden reversals. The initial months of 2025 are expected to feature range-bound trading, with potential catalysts including movements in U.S. Treasury yields. A decline in 10-year yields could support precious metals prices, though Grandich cautions that rapid price appreciation might lead to more substantial corrections. While both metals are anticipated to close 2025 higher than their opening levels, the gains may be more moderate than previous bull markets. This measured outlook reflects broader market conditions and the complex interplay between monetary policy, investor sentiment, and technical factors affecting precious metals prices. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
I think the recap, like you said, is one of the things that I've talked about. As much as I think the metals will finish higher by the end of 2025 than where they start, I don't think we should look for the same type of percentage gains. It's not called to be that, and it may not be in the best interest to just go up straight up, because it could set up for a much larger correction or decline than would be necessary. But I do think it's important to understand why, and it's Monday morning quarterbacking, so it's clear and obvious that the main thing that drove gold higher was central bank buying. And then you have the question then is, well, why were the central banks such aggressive buyers? They're doing it for absolutely a couple key reasons. One is that they recognize that there's too much debt in the world. There's going to be a tremendous restructuring someday. Paper assets are especially in the U.S., got way overpriced, and therefore gold will serve a very useful purpose. I think that was their first thing. But I think the second thing is, particularly in certain countries, is as much as people, when Trump got elected, all of a sudden everybody said, oh, the BRICS are dead, because he said, I'm going to put tariffs. BRICS aren't dead. You'll see that come the fall. They're not going to get into a verbal battle with him right now and all, but he's going to have so much on his plate, Trump, come next fall. I don't think the BRICS are going to be anywhere near the top of his list. But that is the reason also, because those countries and the formation of that recognize that the dollar's days are numbered. Yes, it's still the best of the worst of the currencies at the moment, but the fact of its usage continues to drop worldwide, and all the other issues they're going to face, that minimally these countries are going to set up some sort of trading system within themselves and use gold in some form to give confidence to what will be a new currency or some sort of system that they will use. I don't think they fully have made up their mind yet. They bounced around with it, but I think that's the reason. And so while I continue to expect central banks to be buyers, I don't expect them to be as aggressive as they were. And in order to propel us to the 3,000 number, which I still think is a very viable number in 2025, we're going to have to start to see some real mainstream interest come in. Because remember, we rose in 2024 with liquidating of exchange-traded funds and other things related to gold and all. And one of the main reasons for that was, and particularly in the junior mining sector, the cryptos were eating their lunch. And the crypto market has sent there's so much money being lost. People hear about one or two that are going up. They don't know how many fail and get lost at. But the crypto market in general, I think, is way overvalued. I think this will be the year that they come back to Earth. If not back to Earth, certainly back into the orbit of Earth. And that'll help money go towards the metals. And that's what silver is going to need, Elijah. Now, people get mad, and they're going to get mad when they hear me say this again, because I said it for 25 years, even when I was bullish on gold. And the silver bugs at a conference came up to me as soon as I was done, and he told me 1,000 reasons why I was wrong. But silver remains still like kissing your sister. It hasn't been able to separate itself from the chains that have kept it down. Now, you can talk about manipulation. You can talk about all this stuff. You can talk about a much better fundamental story for it. But until silver can get above $35 or $36 and stay there for more than an hour a day or a week, it's mirrored in this, the talk about it is a lot higher than the reality of it.
Gold prices demonstrated resilience in early Asian trading Thursday, reaching approximately $2,625 as market participants weighed multiple factors affecting the precious metals trajectory. The complex interplay between monetary policy decisions, geopolitical tensions, and potential trade policy shifts continues to influence market sentiment. Recent developments in international monetary policy have created notable divergences, particularly highlighted by the Bank of Canada's decision to reduce its key policy rate to 3.25%. Governor Tiff Macklem's indication of a more measured approach to future rate reductions represents a significant shift from previous guidance, suggesting continued monetary easing would be necessary to support economic growth. Market analyst Peter Grandich suggests this policy divergence could create near-term headwinds for gold prices, particularly if interest rate differentials strengthen the US dollar in early 2025. This perspective gains additional relevance when considered alongside the Federal Reserve's current stance. Following December's 25 basis point rate reduction, Fed Chair Jerome Powell has maintained a cautious approach regarding future rate adjustments, potentially supporting dollar strength and moderating gold's upward momentum. Let's get back to the interview.
Hey, I don't think, unless there was a crash, I don't think gold gets impacted to the negative side to any degree. But where I do think what's important, and this has been the concern, think about this, as you know, just before Thanksgiving, we normally enter what I like to call the say no to bah humbug season, where the people on Wall Street don't even dare allow anybody to talk negatively between Thanksgiving and New Year. And then, of course, when we get to Christmas, we get the Santa Claus rally fable. Well, we actually went down during the bah humbug season. And then we started the Christmas, and we were down 300 and something on Friday. And as I speak at the close Monday, not too far from the close we started the record, we were off a few hundred points again in the Dow. So now the Santa Claus rally is in trouble. So the only thing left is the excitement right after the election that, I call it the coronation that some are viewing it on Wall Street of Trump is left. The thing that will take the stock market down is Trump having issues, not getting out of the gate right, and issues suddenly doesn't look like there's going to be a lot of change right away. But the bond market, this is something that people aren't talking about. I shouldn't say that. There's some of the great hedge funds guys are, and that's why they're actually short the bond market. If you think about this, how many of us would have said, be honest with ourselves, that if the Fed cut interest rates by 100 basis points over a couple months' time, we would have said interest rates would have went up 100 basis points, not down 100 basis points. Fed cuts interest rates go down. Didn't happen. Key factor. And what's really interesting, if you look at especially treasuries, we're now in about the third or fourth year of bear market. We had a 40-year bull market in bonds from the day I entered in the early 80s, even before I entered the brokerage business. Bonds, interest rates are 20%. We already went down all the way to 1 or 2%. That's where gold could be soft in the beginning of the year. And here's how. If we start moving in earnest towards 5% on the 10-year, the dollar is likely to strengthen on that, especially in the interest rate differential where Canada and other leading countries are cutting rates and all. And that strength in the dollar could be reasons to some people want to liquidate gold, or the shorts get more ammunition to play. That's the only way that I see gold coming down 10% or more in 2025. And it wouldn't be for a long period of time. That's what we lean in. Now, if the market crashed 5,000 points, people liquidate everything. But I don't think that's the case. But I do think this, the giddiness, the complacency, the overvaluations of U.S. equities compared to everywhere around the world, even the comparison to small caps or value stocks compared to these thin amount of stocks that have been leading the market are all dangerous signs. And I think we don't need a big decline. I think if the stock market just went sideways, that's bad for some people, Elijah. And here's why. 7 to 8 out of 10 families that I still see in our planning group, from day-to-day workers still up to people with businesses and multimillionaires, they're living one lifestyle at least above where their finances are. And one of the things that's helped support that is continuous gains in the stock market, unusually high gains. And they've gotten accustomed to that. In fact, if you say to people now, I think the market will go up 3 or 5%, 3 or 5%, that's nothing because they've been used to double digit. But they're living a lifestyle that needs that double digit. So it's not so much that the market goes down a lot. It's if the market just doesn't go up a lot, could change things and radically make differences in markets. And these are things that I will just tell you.
As 2025 unfolds, precious metals navigate a landscape shaped by intricate monetary shifts and fluctuating investor sentiment. While gold and silver show potential for steady growth, their trajectories hinge on breaking key technical levels and adapting to evolving market dynamics. This year is poised to test these assets' resilience as they balance range-bound movements and opportunities for significant breakthroughs, making it a compelling period for market watchers and investors alike. What key factors will have the most significant impact on precious metal prices in 2025? Share your insights in the comments below. Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.